to DevTech Finance. In today's video, we will be learning about negative interest rate. This video is going to be quite interesting and useful, so I request you to watch the video till end, and I have tried explaining in a very simple manner. So we will be covering all the aspects like what is negative interest rate, how does it work. So here we will see about the process, how it goes on to recover the economical situation. Then we will see why negative interest rate is important and what are some of the merits and demerits related to it. So let's start with the introduction to negative interest rate. So the first question coming to your mind is, what is negative interest rate? So negative interest rate is an unconventional monetary policy applied by central bank to encourage lending by making it costly for commercial banks to hold their excess reserves at central bank. Now, in simpler way, whenever our economy goes through situations where there need to be steps taken by RBI as well as government, so we call that as monetary and fiscal policies, which are there are changes made in that to curb the economical situation and to bring it on the pace. Negative interest rate is one unconventional monetary policy. We are calling it unconventional because it is not normal. Normally, monetary policy will involve changing the repo rate, then fiscal policy will involve changing taxation and government expenditure. But negative interest rate is unconventional and it is taken as last resort. When other policies does not seem to be working, then negative interest rate is applied. It is little easier to understand when we will go through the process. How does it work? But the main thing you need to keep in mind that central bank, it starts with central bank. So what happens that generally when commercial bank park their money, excess money with central bank pay them interest on that, the money which they have deposited. But in negative interest rate scenario, central bank will not pay money to the commercial banks to parking their savings, the excess reserve, and thus they will motivate the commercial banks to provide more lending, to provide more loans to the customers rather than holding their money with the central bank. And the same scenario will then apply by the commercial banks to the general public. We will see how. So with negative interest rate, depositors are charged for storing money in bank accounts, and borrowers are provided loans with no interest charge or negative interest that even reduce the amount of principal repayment. So in normal scenario, what happens that when you deposit your money in any bank account, you receive interest, which is quite less, but you receive some interest on your parked money. It can also be fixed deposit, saving account, any kind of deposit account. When in any way, when you are holding your money with the bank, banks are obliged to pay you some kind of interest. And when you take loans, interest is charged from you as a borrower because bank has given you loan, they have provided you money, so they will charge interest from you because you are using their money. When we talk about negative interest rate, it is totally reverse. So what will happen? You are depositing your money in bank account. You are charged interest as depositors because bank is keeping your money safe. It is holding your money. It will charge you interest. And as a borrower, you can get money from bank with no interest rate. So you are not paying any interest, and maybe sometimes you will be paying negative interest rate, which doesn't mean that bank will be paying you interest because you have borrowed. It means that bank will be reducing even the principal repayment. So we know that interest and principal repayment. So even what you have borrowed, you are ending up paying less than that. So that is how negative interest rate scenario work. It is totally reverse, where you are paying for depositing money and you are not paying when you are taking money from the bank. Okay, so let's see. In simpler, with negative interest scenario, banking works in a reverse model, as I already mentioned, where instead of bank paying you money to keep in the savings account, so this is what normally happens, you as a depositor, you are paid interest. But if with negative interest scenario, you pay the bank for keeping your deposit. So you pay the bank to do so. It also means that anyone can borrow money from the bank and pay back less than what they borrowed. So we talked about when you are taking loan as a borrower, you are charged interest. But in the scenario of negative interest rate policy, you will be provided loan with no interest rate or negative interest rate where you will be paying less than what you have borrowed. So your principal amount can even be reduced. So this is how this policy works. It is totally reverse. So this was about understanding what is negative interest rate. Now we will see the process, how it is implemented and why it is done to make the economical situation efficient. So let's see. Okay, so we will be talking about economic recovery process through negative interest rate policy. So what happens? See, I've tried putting it in a sequential manner so that you can get it easily understand. You can easily understand and you can keep it in your mind. So it's just an example. There could be other scenarios as well, but majorly this is the reason how this whole thing works. So let's see, economic downturn leads to slowdown in economical activities, not due to any uncertainty or due to any situation in which the economy has been going through downturn. For example, right now the world economy is going through this COVID-19 situation, and it is leading to a way towards the recession in economy, which may lead to depression in economy. So there is slowdown in economical activities. Everyone is staying home. They are not producing. They are not boosting up the economical activities. So there is a downturn in economy. Now what happens then whenever there is such economical downturn, there is slowdown in economical activities, the fear of recession comes in people. So this fear of recession makes people save more and invest or spend less. So people start thinking that because the economy is going through a bad phase, maybe in coming future they will require more money to save with themselves, which they can use in the time of uncertainties. So this fear of recession, what people will do, they will start saving more and more money rather than spending or investing. Now, this leads to decrease in aggregate demand for goods and services. When people are keeping money with themselves, they are not making demands for goods and services in economy. What happens that there is a decrease in aggregate demand. Now, if there is a decrease in demand for goods and services, this sudden decrease will lead to layoffs, because now the production does not need to be done on such a scale. So there will be layoffs leading to unemployment of many workers. And then there will be reduction in prices by producers or sellers. Because there is lesser demands, the producers or sellers, they will try to reduce the prices of commodities and services so that to increase the demand. When the prices will go down with an expectation that consumers will start asking more and thus demand will increase. So with this fear, the producers and seller, they will reduce the prices. Now, with the constant reduction in prices to attract consumers, what will happen? There will be a situation of deflation. So, deflation is an economical situation where the prices of commodities and services have gone to the lowest levels. So, as we talk about inflation, where prices keep on going high, in the same way, deflation is opposite when prices keep on reducing, going at the lowest level. So, this constant reduction will lead to deflation in economy, and layoff will lead to unemployment of many people. Now, what happens when other fiscal or monetary policy, we talked about taxation, government expenditures, repo rates and all, when other policies does not seem to work, negative interest rate is implemented. Now, negative interest rate, what happens that the lower cost of loans is involved. So, people are provided loans at zero interest rate or negative interest rate, and they are paying money to deposit their money. So to deposit their money in bank accounts. So they will try not to keep their money in the banks, rather to borrow the money and then invest in the economy, spend in the economy. So what will happen that this will increase again the money supply in economy, and thus trying to curb the deflation situation and the economical slowdown. So there will be money supply and the economical activities will come in pace, again regaining the economical momentum. So this is how the whole concept, now whether it works or not works depend on the country's implementation policy, and also many times it is seen that for some reasons it has been quite successful, but it cannot be a constant source of policy to be implemented, because there are demerits involved which we will be talking about. So let's see. Now let's see objective of negative interest rate. So why negative interest rate? Till now we have seen the process and we get some idea that why negative interest rate is implemented. So Sweden banks were first who implemented this negative interest rate policy in about, I think, year 2008 or 2009 they did so. And followed by Sweden banks, it was European and Japanese banks as well, which provided negative interest rate to boost up the economical activities. Now, the basic motive we saw that behind negative interest rate was to incentivize borrowing and spending rather than saving. So, making people borrow more, spend more, get more involved in economical activities to increase money supply in economy, so that people do not just keep on saving the money to face the recession. All these things were the motive behind negative interest rate. The low cost borrowing does helps in increasing money supply in economy, and also we saw that how it was helpful for job opportunities. Now this is implemented to increase money supply in economy, boost economical activity, spur economic growth and curb deflation. So we already talked about it, no more explanation required. Now let's move on to demerits of negative interest rates. So till now we have seen how it helps in economic recovery process. Is there any demerits of negative interest rate involved? So first is it alters the way of conventional banking function in terms of deposits and loans. So what we see normally, what we see conventionally, the banking policies, how it works, interest is provided on the deposit at a lesser rate, and then interest is charged on the loan at a higher rate, and this margin becomes profit for the banks. So that was a conventional scenario, but with negative interest rate, it is totally reversed, which creates a kind of chaos in the mind. And then the big borrower in many countries is government itself, which can borrow as much money required in negative interest scenario, which would lead to an increased debt burden on country's economy, which can be impossible to repay once the interest rate goes up and follow normal behavior. So let me explain you. In any country, we see that government also borrows money from the bank. Now this, in negative interest rate scenario, what will happen? Government in any situation, whenever they need money, they will start borrowing from the bank. And this increased borrowing by the government from the banks at negative interest rate or no interest rate will lead to increased debt burden on country's economy. Now you will say that they do not need to pay back the interest and all, so how it would be a burden on government, etc. So see, negative interest rate is not a constant policy which can be there in the economy every time. It is just implemented for a shorter phase of period to deal with some economical situation, like we talked about deflation and economical downturn. Now when the economy start recovering, what will happen then? The interest rate will increase. And if the government is burdened with such a huge interest, with such a huge debt and loans taken, will it be possible to repay the loans when the interest rate will be increased and it will come back to the normal pace? So it will become impossible to repay, and thus there will be a lot of loss which will be suffered by the banking industry. In such a situation, negative interest rate totally will be collapsing the economical situation. Thus, it need to be handled and implemented in a well manner if required. Also, one of the main sufferer in this whole is general public, who keep their money with bank as a safer storage but now have to pay for doing the same. This also leads to bank raising charges on other financial services to regain their profitability. So it is also a situation which is providing a burden on the public, because public try to keep their money with the banks as a safer place of storage for their income, for their money. But what will happen if they are required to pay the money for keeping their own amount with the bank? It would be a demotivation for them, and thus they will not be able to keep their money safe with the bank accounts. and this will increase the pressure on the public as well. Other than that, because banks' profitability is now being reduced, they are not charging the higher interest rate which they used to charge on the loans. They are providing it with no interest or negative interest, and maybe the depositors will not be keeping their money with the bank if they are paying up to keep their money. Rather, they will try to hold the money with themselves. So in that scenario, banks' profitability will decrease, and this will lead bank to raise the charges which they provide on other financial services. So services like insurance, mutual funds, third-party products which they provide. So they will raise the charges on those financial services. So again, that will be a demerit for this kind of situation, and this won't motivate the public to invest in such scenario. These are some of the demerits of negative interest rate which need to be keep in mind. Thank you for watching. I hope I made it simpler and easier for you to understand the whole scenario of negative interest rate. Do like and share my videos. Subscribe to my channel, DevTech Finance. Thank you all.